Hello guys, welcome to another weekly breakdown video. Today I'll be breaking down the second week of June, as you can see, starting from 17th of June 2024. Starting from June right here, the price action right now is so clear and we are catching some beautiful trades. And even on this week where I backtested, I've got some beautiful trades. Let me show you how and how do we select our daily bias, and I figure some things out, which also I'm gonna let you guys know. So before starting my weekly analysis, let me quickly show you the news. Throughout the week, on Monday there is Empire State New York news, on Tuesday there is New York, no GBP. Wednesday there is GBP CPI, so you have to watch out for that. Thursday there is GBP news, monetary policy statement, so on and so forth. On Friday there is USD news, GBP news, so it's very tricky. So the only days that are, according to news, the only days which are not tricky to trade are Monday, Tuesday and Thursday right here, right? Because at our timing at London session we don't have any high impact sort of news. The same thing on the economic calendar, and I will look for the news on my Forex Factory. So yeah, and before starting the weekly analysis video, let me quickly show you the callouts. Okay, so on the callouts you can clearly see, let me go one by one so that it doesn't confuse you. Decide the zones you want to trade according to the volume of the previous day's close. 100%. What am I saying here is, for example, yes, if the volume one day is bearish like this, yeah, just like I have marked right here, if the market is bearish like this, does it make sense to go up here then make the move, or does it make sense to make a move early? Answer it. Early, right? Yeah, that's the correct answer. But if the supply zone went down, the market went down, but the buyers came in here and then the market closed something like this, meaning the volume was there, the volume is not that much, the momentum is not that much, then it makes sense for the market to come all the way up here and then make the move. Basically what I'm saying is, you decide your zones you want to trade according to the volume of the market of the previous day close that I figured out through backtesting right here. Also I've written here, look for the closest zones. If the volume wasn't high, it makes sense to trade only the best zones made in our session, and if the volume is high, it's clearly you can see that it is going to one direction, then you can trade the most closest zones. And even if your weekly bias is bearish but the price can go up from some days, like the weekly profiling classic expansion, here what I'm trying to say is, for example, the weekly bias is bearish according to how this candle closed, right? But Monday, Tuesday, Wednesday can go up. Why? Because of the weekly profiling thing that we know, right? This is the bearish weekly profiling classic expansion right here, so we also have to follow that right there. So that was what I was saying. You can pause it and read if you want. And the third call out is, in this trade we can clearly see a pattern. The London session trended down, induced all the early buyers, and then when the New York session came in, it manipulated the London buyers again, and then move happened in New York session. So earlier I said we only trade the zones that are made in our session, right? Why? Because the order blocks that are not made in our session are very high probability of getting induced, and the main move might happen. For example, it is a New York session demand zone, then it makes sense for the price to make a move from that demand / supply zone in New York session itself. Anything other than that may be inducement, maybe manipulation. And here the M30 order block wasn't strong because of the timing. This I will show you according to the price action. Just because we gave our stop loss 1.5 extra pip room, we got saved. So yeah, those are all my callouts. The callouts are very important because they help us determine our trend. Now I will not explain why I mark this supply demand. I know it, I can do it in the live markets. Any market you give me, I will do the same thing. I will draw the same zone. So right now let me explain from the weekly analysis, right? So on the weekly, we look for the weekly bias. My weekly bias going to the next week was bearish, and if my weekly bias was bearish, my target was to fill up this fair value gap. And if this fair value gap is filled to the T, then if the volume is very high like it used to, I will target this draw of liquidity down there on that weekly demand. So on DXY we can clearly see, if I show you the weekly analysis, I will obviously not show how to mark these demand zones because I know it, so on and so forth. And in every video I have explained why I have not marked the supply zone here, because of this higher low and higher high. anything the market does inside this zone will be considered by me, at least, as accumulation of orders and to make a bigger move. So my bias going to the next week was bullish. This was my draw of liquidity. If my bias is bullish, obviously I will look for bullish draw of liquidity, right? And I've also written here the bias DXY was bullish, GU was bearish. So on the weekly, if we get that information, it's enough for us. So that is when I go to the daily time frame. So going on the daily time frame, going on Monday, my bias was bearish because obviously of how this Wednesday, Thursday and Friday close story. And it is also looking like a head and shoulders pattern right here, breakout of the neckline, retest, boom to the downside. So going on Monday, if I was looking for something, it would be sells, as you can see right there. That is when I go to the lower time frames like the H4. On the H4, this was the supply zone that I've marked. If the price wanted to come here Monday, Tuesday, Wednesday, then we could have looked for sells. So something like that happens exactly on this trade, on this weekly breakdown. Please focus. You will get to learn a lot of things here as I will show you what's happened. Okay, so on the hourly time frame, we can clearly see if I am looking for sells, I will look for supply zones. I would wait for the Asian range to close, because until and unless the Asian range closes, I don't do anything. So yeah, the Asian range close, I was looking for a trade from this sort of M30 supply zone right here, because look what I said, if the volume is very high like it was in this trade, right? On Friday the volume was very low, the market only went down, then it didn't make sense for me to go all the way up here and then go down here, because it would be a very big move. So what I anticipated was this previous structural liquidity sweep, come to this sort of supply right here on the M30 and then make a move to the downside. So I was looking for something like that, and which didn't happen. Obviously this was a continuation setup right here. This was a continuation model after sweeping this, after filling up this fair value gap, small fair value gap. Obviously whenever there is two fair value gap on the continuation model, I wait for both of the fair value gaps to get filled. This was a supply zone, this was a continuation model. To be honest, to be a good, for a fair value gap trade to be valid, I need, for a fair value gap trade to be valid, I need both. If there is two fair value gaps, I need both the fair value gaps to get filled. It is my rule. And to take a fair value gap trade, I need the fair value gap to get filled at least more than 50% and then give a rejection. In this case, the fair value gap was just tap in, so this was not a high probability fair value gap trade, but because I'm back testing, I decided to take this trade. I gave my stop loss enough breathing room, like 1.5 pips, just like I have written here. We gave our stop loss 1.5 pips extra room to breathe. That is why I was not stopped out on this trade. And I have to do that every single time. Maybe your bias is correct, your trade is correct, everything you want to see in a trade was there, lower time frames, higher time frames, order blocks mitigation, your trade checklist, everything was checked. But if your stop loss is doesn't have enough breathing room, the price can come back, retest, scare the early buyers or sellers, and then make the move, right? That is why giving your stop loss room to breathe is very important. And yeah, that is what I've written here. So this was the M15 trade, which was a break even. This was not a loss, this was a break even trade right here. And yeah, look at this, bro. The price went down. After I sold, I got out at break even right here, and then look at the buying pressure right here. This is what I love about this strategy, right? On Monday the bias was not clear. If it was something, I was looking for something, it would be sells. But going on Tuesday now, I will look for buys. Why? Because of how this buying pressure happened right here. Watch out how the buyers came in the market right here. Literally the buyers aggressively bought right here, clearly showing that huge buying pressure is in this position right around here. So this also happened on the New York session. So going on Tuesday, my bias will be good, I believe. So Monday closed something like a bullish pin bar, respecting this daily demand zone right around here. There was a fair value gap to fill on the daily time frame. So going on Tuesday, what I was thinking was, I was looking for buys, temporary buys, because my weekly bias is still bearish. Obviously, even if my weekly bias is bearish, I figured out one more thing was, even if my weekly bias is bearish, I can look for buys. Why? Because we know how the weekly profiling thing works, right? If Monday closes a bullish pin bar, Tuesday, Wednesday we can look for buys and then continue to the downside with the overall bias being bearish. So that is what I was looking for. On Tuesday I was looking for some sort of buys. That is when I went to the lower time frames. Let me quickly show you the DXY bias on daily. On the daily time frame on DXY, Whereas on DXY there was no fair value gap to fill. As you can see, on GU there was fair value gap to fill right there, but DXY already filled up the fair value gap. But obviously GU was looking so clean, so I decided to go with my GU bias. On DXY only, I go only for the confirmation, and yeah, nothing more than that. Don't hit your head around like if everything should be perfect. No, everything will never be perfect. You have to adapt to the conditions of the market, and then you have to take the trades. So going on Tuesday, I was looking for buys, and if I'm looking for buys, I will have to look for some sort of change of characters, to be honest, because the price was bearish and suddenly it is going up. So obviously I will have to look for some sort of change of characters, where the change of characters was not present. This is why Tuesday was a low probability day for me, because there was no change of characters. But rather than that, everything was perfect. I took an L on Tuesday, as you can see right here. Let me quickly explain the trade. I was looking for buys, so this was the demand zone I was looking to trade on 30 minutes demand zone right around here, which was made on 21 PM, which is 9 PM Indian Standard Time. And this was not our time. As you can see, the huge buying happened from here. Yes, there is always a chance that the price can make a move from here, right? A fake move, just like it did here. It gave a fake move just before our timing, 8 PM UK time, 7:45 AM UK time. We got a fake move. Many people entered with me. I put a limit order right around here. I believe I would have put a limit order right around here. We would have lost this trade because of how this trade played out. And yeah, this demand zone here didn't work. And I have explained you one thing, right? The M30 order block was not strong because of the timing. It made it a fake move, and in the trade we clearly see a pattern. The London, also you can see here the London session. What did the London session do? Pre-London session went up, gave a fake move. London session went to the downside, and then the London sellers, the London early buyers will get induced here, and on the New York session we will get the move. This is a pattern used by the big banks, institutional, you can see anything, SMC. This is what we need to learn, right? Inducement. The price needs liquidity to move. Liquidity is the essence of the market. So that is when I know that now the price has swept enough liquidity. This is when I took the trade on New York, and I won this trade eventually. And I said to you one thing, right? When the bias is so strong, you can trade any zone. But when the bias is not that strong, like for example, the bias was bearish and suddenly it changed to bullish, right? That is when I wait for my demand zone to get mitigated. Those are the situations where I need my demand zone to get mitigated, because obviously the bias is up and down, so we are not that confirmed. Like in this example, this was a very good example. Now let me go to the H1 and show you the trade. It was a beautiful trade. As you can see, there was another inducement right around here on London session. Again, the London session buyers kick in, gave another inducement, and then the main move happened from this demand. Look at the buying pressure from here, bruv. This is a beautiful demand zone. Next time if you see a demand zone like this on the live market, you can trade it. Even if there is no market structure shift, a demand zone like this, bruv, literally 7, 8, 9 candles in a row. It is a very, very strong demand zone, and the move literally happened. The move we were anticipating throughout these zones right here did happen from New York. From that New York session demand zone. So it was a beautiful pattern that I've noticed this week. This week alone I've learned so many things in the markets. Yep, now I'm so optimistic of the markets right now. I can easily pass a perform challenge, and I will prove it. I literally 100% believe in myself, and I'll prove it. Here you can see now the fair value gap has filled 40 to 50% right around here. So going on Wednesday, what makes more sense, bruv? It makes sense for me, at least on Wednesday, to go and look for buys again. Why? Because the bias is so clear right now, right? DXY is going to the downside, GU is going to the upside, so I am looking for buys. There is also some sort of fair value gap left here to fill. That is when I go to the lower time frames. But you have to keep in mind, bro, Monday, Tuesday there was no news, so it was ideal to trade. But on Wednesday there is GBP CPI, so it is very, very tricky, because CPIs, we know that it tends to manipulate the market, and also huge moves can happen in our direction and against our direction regardless, right? So I basically didn't trade it on Tuesday because there was no sort of demand zone. Even now the market didn't give a clean change of character right around here, so that is the reason I decided not to trade. And also CPI literally was on GBP's favor right around here. You can see huge buying pressure happened right around here. So on Wednesday I didn't took the trade. Going on Thursday now, I'm not wasting any time right here. So now you can see the fair value gap here got filled to the T, right? This is perfect price action to the T, literally picture perfect. Nothing can be perfect, more perfect than this. This week I can guarantee you, if in the live markets a week like this appears, I am gonna profit from that week, because I have learned, I have seen it once, right? And I have a photographic memory. Monday, Tuesday, Wednesday went up. Now it makes sense for me, at least for the weekly profiling, like Monday, Tuesday or Wednesday make the high of the week, and then Thursday and Friday to continue with the weekly bias being bearish, right? So that is when on Thursday I was looking for sells, because now it makes sense to look for sells with the higher time frame bias, because also the fair value gap here got filled. Now this is the supply zone, you can argue, because but this supply zone is not yet valid because it didn't body close below here, the low that made the new high, this demand zone, right? So that was the reason I was not looking for buys anymore on GU. So quickly going on DXY, showing you the bias. The bias on DXY was not clear, so trading on Thursday was also very tricky, because we didn't knew that the market wanna go down or wanna continue to the upside. So it was very, very tricky. So not trading on Thursday was a better option, but I decided to trade anyways. So let me show you what I was looking. If I was looking for something, I would look to trade from this sort of H1 demand, because this demand zone was very, very clean, and also now the change of character, or you can say a break of structure, happened from here. On the H1 time frame, the change of character happened from this zone right around here, but I didn't mark here, I don't know why, but this was the change of character, just for your understanding. So I waited for the Asian range to close. Obviously, until and unless the Asian range closes, I can't do nothing, or I don't do anything. And yeah, basically on Thursday I didn't took the trade. As you can see, if I took the trade, it would show right there, right? So I waited for Thursday to close, and Thursday literally melted down to the downside right here. Thursday literally melted down to the downside. It was continuation model, but we couldn't even catch a continuation model right here, because there was no sort of beautiful zones. Now as I am making a video, I am seeing a continuation model right here, lower highs, lower lows, lower highs. It was a continuation model. I missed the trade, mate. I missed the trade. It was beautiful. There was a fair value gap on the M15. This was a supply zone, came up to the upside, gave a beautiful rejection right around here. Could have caught a 1:3. My bad, I missed this trade on Thursday, because I was like, my bias was not clear. Market was going up, it gave a rejection, but on DXY it was a doji, right? So whenever you are confused in the market, best thing is to do is wait for it to play out. Only trade when you are optimistic. You don't need to trade more. It is a misunderstanding in the market that you need to trade every day. No, you don't need to trade every day. You only need to trade whenever the bias is clear and whenever you understand what's happening, because at the end of the day you have to hold yourself accountable even if you win or lose. So it's better to only trade when you have a clear understanding or clear picture of the market. So now going on Friday, I'm looking for sales again because of how this Thursday candle closed, and what I've said you earlier, like if your bias is bearish but the price can go up, so on and so forth. So decide your zones, right? I explained you something on the starting of the video, right? Decide your zones according to the volume or momentum on the market. Look at the Thursday candle, how it closed, right? It closed so bearish. Does it make sense to go all the way up there? You will not understand that now, but let me go to lower time frames to explain it more clearly. So going on the lower time frames, I was looking for sells. I marked this M15 supply zone. Why? Let me show you. Now watch out, okay? So going on, sorry, it was H4. So clearly we can see the market is only went down on Thursday, right? So whenever the market is doing something like this, only going down with huge volume, that is when, right, there is a supply zone here, there is a supply zone right around here. But does it make sense after the Asian range closes? Let me wait for the Asian range to close. The Asian range closed, right? Does it make sense for the market to go all the way up here and then come down, or does it make sense to go down from here if it wants to go down? For me, it makes sense to go down from the closest zone in this case scenario, because on Thursday, I told you decide your zones you want to trade from with the previous day's volume, right? This is exactly what I've done here. The previous day's volume was so bearish that I was looking for a supply zone the nearest possible because of the volume that it was trading. But there was also one reason. There was supply zones throughout to the upside, right? So if the price decided to go up from here to make a reaction from this demand, there is also a slight chance that it might continue to the upside from here, because it has gone up loads, and also it has changed character on the hourly, so it makes sense to go up from there. So yeah, that is what I was looking for. But this trade I wouldn't have taken. Why? It was a beautiful setup, to be honest. There was Asian high liquidity sweep, M15 supply zone mitigation, but this was not our this trade didn't qualify our trade checklist for our trade, because it was Friday. Not because it was Friday, but also there was huge amount of news throughout the day. There was GBP retail sales, and also whole day there was PMI news, manufacturing PMI, services PMI. So that was one of the case. And yeah, the move did happen. Also after this, I wouldn't have got a beautiful stop loss right here, right around there. So that was also one of the reasons. So this was a beautiful week. As you can see, we got to learn a lot of things. And yeah, and on Friday the move did happen. If I took this trade, I would have got a winner, but it is what it is. You win some, you lose some, you miss some, right? You can't catch them all. You don't need to catch them all. If you can follow your trading plan, follow your strategy every single day on the market, and control yourself, control your emotions, improve every day, you're gonna see results, bro. It is a side effect. Result is a side effect of your hard work. If you put in the work, you're gonna get the result regardless. So yeah, see you on the next video.